Montana health insurance rates set to soar in 2026. What you need to know. Montana health insurers propose significant rate hikes for 2026. Residents of Montana who buy individual health insurance through the federal marketplace may face substantial increases in their plan costs, with projections indicating double-digit hikes in 2026. Blue Cross Blue Shield of Montana, a prominent player in the insurance market under the Affordable Care Act, ACA, is seeking an average rate increase of 28% for individual plans. Meanwhile, Mountain Health Cooperative is suggesting a 25% rise in their rates. The preliminary proposals, made public by federal health officials on August 1st, reveal how insurers in Montana are gearing up for changes in the ACA marketplace that will take effect in the upcoming year. A recent analysis from July indicated that insurers in several states had requested a median premium increase of 15%, highlighting a broader trend across the country. For Blue Cross Blue Shield of Montana, the largest insurer in the state, the actual rate adjustments will differ significantly depending on the specific plan. For instance, the Blue Preferred plan is expected to see an increase of about 23%, while the Blue Focus plan could rise by as much as 33%. In a document accompanying the federal government's announcement, the company explained that these proposed changes are largely driven by anticipated increases in medical and prescription drug costs for their members. The proposed rates reflect expected changes in year-over-year medical service and prescription drug costs, which encompass adjustments in reimbursement rates to providers, anticipated service utilization, the mix and intensity of services, and the introduction of new procedures and technologies, the document stated. In contrast, Blue Cross Blue Shield of Montana had previously requested and received an average rate increase of approximately 5% leading up to 2025. Experts in national healthcare have pointed out that the proposed rate hikes for 2026, while closely tied to shifts in federal policies and the overall uncertainty surrounding the marketplace, the enhanced premium tax credits that were introduced during the pandemic, which have made health insurance plans more affordable for many consumers, are set to expire at the end of this year. However, it is likely that those with chronic or serious health conditions will continue to maintain their coverage, which could make the overall insured pool more costly for insurers to manage. Brian Campen, a spokesperson for Blue Cross Blue Shield of Montana, stated that the anticipated expiration of enhanced federal subsidies played a significant role in shaping the company's proposed rates for 2026. Rate filings for 2026 assume that enhanced federal premium tax credits will end at the close of 2025, as indicated by the Centers for Medicare Services. Our plans are priced to reflect the expected healthcare needs of our members. The proposed rates for 2026 encompass both new and existing individual ACA-compliant plans and reflect industry-wide market changes, Campen explained. He further emphasized that the company is committed to maintaining a stable health insurance market with a variety of competitive plan options, a commitment they have upheld since the ACA's inception. Olivia Riuta, the Director of Population Health at the Montana Primary Care Association, advised consumers in Montana to be ready to adjust their plans in light of these developments. With the proposed rate increases and the reduction in tax credits, the auditor's office has informed federal authorities that it expects to complete its review of the requested changes by August 13th. We are striving to ensure that health insurance remains accessible and affordable for everyone in this state, Sanders remarked. The first word in the Affordable Care Act is affordable. If we reach a point where it is no longer affordable for people, that presents a significant issue. We take our consumer protection responsibilities very seriously within this agency. Consumers are encouraged to share their thoughts on the rate review with the state auditor's office at csi.rates@mt.gov. Impact of Trump's new law on health insurance in non-expansion states. The current debate on healthcare policy is more intense than ever, especially when it comes to the impacts of recent legislative changes, even in states that previously opposed the Affordable Care Act, ACA. But here's where it gets controversial. The new laws introduced under Trump's administration may actually deepen health disparities, even in states that resisted expanding Medicaid for over 10 years. This isn't just a political tug-of-war. Many experts warn these changes could have serious consequences for millions of Americans' access to affordable health coverage. Let's unpack what's happening. A major component is the Republican-backed budget legislation, often called the One Big Beautiful Bill, which, according to data from the Congressional Budget Office, around 10 million people could lose their health coverage during this period because of these cuts. Now, some might think that states which expanded Medicaid through the ACA would be somewhat shielded, or at least better positioned. However, the truth is more complicated. These cuts affect everywhere, not just the 40 states that took the step to extend Medicaid coverage. The law also includes proposals to limit the federal payments that states receive for those added via expansion, and these measures spark intense debate. Critics, including libertarian think tanks like the Cato Institute, argue that politicians in non-expansion states should be livid, because they're about to see the financial burden shift even more onto their residents. And here's a key point. If the enhanced federal subsidies for coverage through Obamacare, ACA plans, are allowed to expire at year's end, the premiums could soar dramatically, by over 75% on average, and that could make coverage unaffordable for many. Insurers are already signaling their intention to raise prices, which means even more people could be pushed into the ranks of the uninsured. Take Florida, for example, perhaps the most striking case. Despite refusing Medicaid expansion, Florida has become the leader in ACA enrollments, with over 2.2 million residents relying on marketplace plans. But if the current subsidies are not extended, many of these vulnerable individuals face the harsh reality of higher costs. Francoise Charm, a 62-year-old single mother from Miami who depends on ACA coverage, vividly describes how healthcare has been a lifeline. Prior to obtaining insurance, she would do anything to check her cholesterol, donating blood, paying out of pocket for wellness exams. Yet now, with around $100 monthly premiums, she struggles to afford even that. For her, the safety net of Obamacare isn't just coverage, it's her lifeline. Experts like Cindy Mann of Manat Health emphasize that without the extended subsidies, everyone will bear the brunt, especially the lower-income individuals in states that didn't adopt Medicaid expansion. They now disproportionately rely on the marketplace plans, which become less affordable as federal support wanes. But here's the twist. States that expanded Medicaid seem to have made a wise policy choice. They're somewhat insulated from these federal cuts, and their populations face fewer health access issues. Meanwhile, non-expansion states are at risk of increased uninsured rates, which could destabilize their health systems further. Official responses from state officials reveal some reluctance or uncertainty regarding Medicaid expansion. For instance, South Carolina and Georgia's governors haven't clarified whether they're reconsidering their stance. In the broader picture, enrollment in ACA marketplace plans has more than doubled since 2020, reaching over 24 million people nationally. Yet, if the subsidies evaporate, premiums are expected to jump sharply, raising the barrier for many. And the impact isn't limited to costs. Hospital and provider payments are in flux too. Many hospitals in non-expansion states rely heavily on federal supplemental payments or special funding mechanisms, like directed payments, that could diminish as part of the reform. For states that refused Medicaid expansion, the consequences might be even more severe. They tend to spend less on Medicaid per person, offer fewer services. Florida's healthcare leader, Mary Mayhew, highlights that reimbursement rates are so low that essential services are disappearing, including nearby OB/GYN care and timely dental access for children. She warns that these policies will lead to higher future costs and poorer health outcomes, yet they save money in the short term. This ongoing debate raises a fundamental question. Is the cost-cutting approach truly sustainable, or just shifting the problem downstream? And do states that chose not to expand Medicaid understand the long-term implications, Or are they risking a healthcare crisis for their most vulnerable populations? In essence, the policies enacted today set the stage for a potential healthcare disaster. More uninsured Americans, worse health outcomes, and both individual and systemic costs mounting up. So, what do you think? Are these legislative changes helping or hurting the people who need healthcare the most? Are states making the right decision by holding back on expansion? Let's hear your thoughts in the comments. This isn't just politics. It's about real lives and the future of healthcare in America.